Okay, so this week's a very pivotal moment that we've seen in the market for many months. We're going to get a wave of new financial data, including jobs numbers, inflation reports, and updates from the Fed. So, why does this all matter? Because these numbers don't just move the stock market, they're going to set the direction for mortgage rates the rest of the year and shape what's possible for the rest of the year. So, here's what most people and frankly, most loan officers are going to miss. It's not just about the Fed cutting rates. The bond market is the real driver of mortgage rates right now. And that market is laser focused on much bigger risks, like the government spending and the size of the deficit. Even if we see a rate cut, it may not mean mortgage rates drop the way people hope. Lately, rate cuts haven't even moved the needle. That's because investors are watching the big picture. And that big picture is very complex right now. So, why should you care? Because the right move this week isn't just to watch the headlines, it's to understand what these numbers mean for you and to have a strategy that puts you in control regardless of what the Fed or the media says. Here's what smart buyers and sellers are doing right now. They're paying attention to the data. They're using this window of uncertainty to get offers accepted, sometimes with much better terms because competition is much lighter. If you want more than just a rate quote, if you want someone who can translate these numbers and all this data and give you a plan built around facts and not just hype, that's where our expertise matters. The market is very complicated, but making smart moves in moments like this is what separates a good decision from a very costly mistake.